Steigende Inflation, Rekordenergiepreise, steigende Rohstoffpreise. Das Zeitalter der Sachwerte hat definitiv begonnen. Und der Rohstoffsuperzyklus ist erst ganz am Anfang. Umso mehr freue ich mich, heute mit einer absoluten Investorenlegende zu sprechen, nämlich niemand anderem als Rick Rule. Rick Rule ist der Rohstoffinvestor schlechthin, Mitbegründer von Sprott Asset Management, einem der größten Investoren im Rohstoffbereich. Ich habe hier im Kanal schon viele Videos zum Rohstoffsuperzyklus gemacht, die findet ihr in der Playlist, unbedingt anschauen, gerne auch teilen. Und wenn ihr neu hier im Kanal seid und euch der Content gefallen hat, dann freue ich mich riesig, wenn ihr natürlich ein Abo dalasst, die Glocke aktiviert und den Kanal auch weiterempfehlt, damit immer mehr Menschen finanzielle Intelligenz erreichen. Übrigens, in meinem letzten Buch, Die größte Chance aller Zeiten, habe ich ein ganzes Kapitel über Rohstoffe geschrieben, von Kohle, Gas, Uran, Gold und so weiter. Und natürlich auch mit ganz klaren Tipps, welche ETFs und Aktien interessant sind. Also, ich freue mich jetzt riesig, dass Rick Rule da ist. Ich werde auch am Ende des Videos eine Zusammenfassung nochmal machen, was Rick Rules Aussagen waren und wie ich die bewerte. Und jetzt uns allen viel Spaß mit Rick Rule. Welcome to a new episode Commodity Supercycle, and today with a special guest, the one and only Rick Rule. Rick, great to have you on my show. I'm so happy.
Pleasure to be with you. Thank you for inviting me on.
Yeah, definitely. And we will do this again. I can already tell you this now, and perhaps we'll meet in Zurich. So you're sitting right now in Canada?
No, I live in Washington State, in a little town called Anacortes, about equidistant between Seattle and Vancouver.
All right. Okay, perfect. Yeah, Rick, you have been around forever in the commodity space. You are a legend in the industry. You have lived through the biggest booms and bust cycles in this industry. So, like I said, this series is called Commodity Supercycle. So let's hear it from the OG of commodity investing himself. Are we in a commodity supercycle?
I believe we are, in fact, in a commodity supercycle. Your younger audiences need to know that super cycles can take a while to develop, meaning don't expect to become fabulously wealthy over a long weekend. And while participating in a commodity super cycle, be prepared to suffer 25 or 35% declines. When I lead off by telling people that I think that we're in two bull markets, a precious metals bull market and an industrial materials bull market, too often people think that because I've described a circumstance as inevitable, that it's imminent. And those are very, very, very different words. So yes, absolutely, we are in a commodity supercycle, but the trajectory will not be straight up, and it will not take place in a time frame that will suit impatient and overly leveraged speculators.
Yeah. Wise words. Yeah, it will be volatile, and we just see it right now. Volatile markets, they go up and down like a roller coaster. So perhaps you can help our listeners who get like shaky hands or afraid losing money. Tell our listeners an entertaining anecdote from your investment career in commodities, an investment which went horrible wrong, or the craziest moment you had while investing, basically anything you can think of.
Well, amusingly, they're the same story. Horribly wrong and spectacularly right. My thesis has always been that in capital-intensive cyclical businesses like commodities, that you are either a contrarian or you are going to be a victim. Those are the two choices. Buying low, selling high presupposes that you bought low. Having the courage of your conviction is what allows you to endure the volatility in the time frames. So I remember in the latter part of the decade of the 1990s, the uranium thesis was just spectacularly compelling to me. Uranium had been in a bear market. really for 20 years, which is a very, very, very long bear market. Many investors were bored by uranium, but the rest were hostile to it. Literally hostile. If you would talk about uranium, people would vilify you as being a champion of Chernobyl or 3 Mile Island or worse, Hiroshima and Nagasaki. From a contrarian investor's point of view, the fact that somebody hates something makes it very interesting. The arithmetic, too, Mark, was very interesting. On a global basis, the uranium industry, according to the International Energy Agency, was spending about $30 a pound, fully loaded, including cost of capital to make uranium. And they were selling the stuff for 10, losing $20 a pound and trying to make it up on volume, you know. But there was this huge supply deficit, meaning that we were using more uranium than we were producing. And despite the fact that people didn't like it, uranium was and is an essential part of baseload fuel for most of the developed nations in the world. So I started looking for uranium speculations, and I started looking very hard. I did some investing too, of course. I bought Cameco, the big producer. But I came upon a little tiny company in Western Australia called Paladin, and it had a market capitalization of about 1.6 million Australian, which was, $4.95 US. It was no money. And it was run by a guy, John Borshoff, who had worked, incidentally, for the West Germans for Urangesellschaft in the 1970s. And the West German government had spent about $1 billion looking for uranium worldwide. And for Mr. Borshoff's termination, when they shut down the program, they gave him the database. They gave him the database of $1 billion in German expenditures worldwide, which was in this little tiny market cap company. And so I had everything I wanted. I had a commodity that was painfully cheap, that had to go up, because if it didn't go up, the lights would go out. You know what I'm saying? And I had a driven entrepreneur who'd spent his whole life in the business, and I had a $1 billion database. I said, how are you going to find uranium? He says, I don't have to. I just have to look at my database. The West Germans already found it for me. Wonderful. So we wrote a save the company check at 10 Australian cents a share with a 15-cent warrant, if my memory serves me well. And I was really happy about it. I put some of my best clients in, and the stock went from 10 cents to 11 cents to 12 cents. That didn't matter much. We owned so much we couldn't sell in a thin market. But then it reversed. It went from 12 to 11 to 10 to 9 to 8 to 7. You get the picture. 9 months into this, 10 months into this, the stock that I was feeling like a genius for having bought at 10 was selling for about a penny. And the money that we had put in the company, telling them to aggressively stake uranium discoveries, was running low. At a time like this, when you have a 10-cent position that's gone to a penny, you don't have a buy you don't have a hold. You have a buy or a sell. You have to revisit your premise. And so I revisited my premise. I spent a long time with Mr. Borshoff. I spent a long time thinking about the uranium market. I spent a long time talking to Cameco, to the utilities. And I said, you know what? I'm right. The market's wrong. I was early. If I get shaken out, it'll be the single dumbest move of my speculative career. So I didn't catch any at the penny, but I caught a lot at a penny and a half. And I caught some more at 2. And I caught some more at 2.5. And I caught some more at 4. Suffice it to say, 5 years after the stock had gone from 10 cents to a penny, 6 years, I'm sorry, it went from a penny to $10.
Wow.
So one of my worst speculative mistakes turned out to be my best speculative win, because I disconnected the phrase inevitable, the fact that the uranium price had to go up. I disconnected inevitable and imminent. In other words, I had my time frame wrong. The beauty of the lesson is that because I understood my thesis so well, I had the courage of my conviction. Yeah. At the end of the discussion, I was able to determine from an examination of the facts that the probabilities were still on my side. So rather than being shaken out of a 10-cent stock at a penny, I doubled down. Mm. And the consequence of that is that I enjoyed a literally life-changing experience in speculation the type of speculation that most people only get to dream about. And it's important to note that that profit came not just materially, although the material rewards to myself were great, but reputationally. The good clients who went through that whole scene with me, 10 cents to a penny to $10, came back with a much better sense of what I do and why they should do it with me. So I hope that story amuses your audience. It's interesting that I think that we're in the middle stages of the uranium bull market again, and for the same reasons.
Yeah. It's a great story, and it makes clear which lesson is very important. You need a game plan. You have to know your investments. You need a strategy, and you had one because you had a whole picture, and you didn't get moved out with the first dump and everything. So this is a great lesson learned, definitely also for our audience. So right now we have, I think, the hardest macroeconomic environment in our lifetime. So we see inflation, we see war in Europe, we see Corona and COVID and lockdowns in China. We see supply chains damaged. So what is your current view on the macro environment?
I would say that the macro environment now is less challenging in most senses than the 1970s were. The 1970s, we still had an active Cold War. Your country didn't exist at that point in time. It was bifurcated with thousands of tanks and tens of thousands of troops facing each other. That was mostly a more challenging economic environment than today. What's different is that the tools that the governments have to use today are less. The West German balance sheet before reunification, before Europe, was a fortress. The American balance sheet, at least relative today, was a fortress. Government debt at the federal level in the United States in the 1970s was 20% of GDP. Now it's 120% of GDP. The reliance or the faith of the citizenry in the government, the idea that people aren't responsible for their own well-being, but rather that they have a call on the collective, is different. So I think the circumstance is challenged. The other thing that has changed, and for me this is for the better, for mankind maybe not, is that there's almost twice as many people on Earth as there was then. And the people are demonstrably richer. The poorest half in humanity today, while still desperately poor, are in immeasurably better condition than they were in the 1970s. True. And the fact that they are both richer and more numerous means that our calls on natural resources, on raw materials in a global basis, is much more stressed. There's much more call on these things. I would argue with you that the last commodities bull market that I enjoyed, the 2000 to 2010 bull market, was as much about the ascent of China and the ascent of humankind as it was about anything else. Deng Xiaoping saying to be rich is glorious and moving 500 million people from rural penury to urban prosperity. And I think that we are in the beginning phases of a similar revolution of the poorest of the poor. And when I say revolution, I mean in a very good sense. Of the poorest of the poor. And I think that this will have profound impacts in the commodities market. Now, while this is happening, we're having geopolitical strains. The Chinese are needing to do what they can do to get access to resources. This is nothing new. It's what the United States did in the 1950s. It's what Europe did in the 1960s. It's what Japan did in the 1970s. This playbook, this scramble for resources, is something that's completely consistent if you study even just the history of my life, not great history, but it's something that's happening. It's important to note too, Mark, and this is wonderful, that as humankind succeeds in increasing the standards of living of the poorest of the poor, the purchases that give them the most utility are material. If you make more money, you might go on a better vacation. You might buy some services. You might even splurge for some little dinky toy made by Apple. But it's not commodities intensive. 1.2 billion people on Earth live without electricity. 1 billion people on Earth have cumulative household calorie counts of less than 1,200 calories per capita. When poor people get more money, they want electricity, which takes energy. It takes copper. They go from barefoot to shoes, to a bicycle, to a 50cc motorcycle, to a Toyota Hilux. They replace thatch roof with steel. An extremely materially intensive transfer takes place as poor people get more wealthy. And that's precisely what we're seeing on a global basis. And it's mostly a good thing.
Yeah. Definitely. I'm a commodity bull as well, and I want to get through a variety of different commodities today with you. And like you are, I'm a big uranium bull. In my last book, I had a whole chapter. I actually quoted you, for uranium, and it was before all the bull market started. Before we had this renaissance of nuclear power plants in Europe because of Russia and everything else in ASG. So you have been around for the big uranium bull market in the 2000s, like you already mentioned, and made hopefully a fortune. How did you get into uranium back then? Was that the experience, or did you have any insights?
I'm embarrassed to say that I was around for the uranium bull market before that, which is the one in the 1960s and 70s. So I had a sense of how uranium exploration worked because I'd participated in it, both in the Western Sedimentary Basin in the U.S. and up in Canada. But probably more importantly, I'm good at arithmetic. I noticed that uranium, despite the fact that people didn't like it, generated at that point in time 20% of total U.S. energy demand. If you have a circumstance where there's a fuel that generates 20% of demand, and where the industry is in danger of liquidation because of low prices, you have to ask yourself, is it more probable that the price of uranium goes up or the lights go out? Because those are the only two choices. There's no mid-range choice. And I decided that it was more likely that the price of uranium went up than the lights went out. It was really that simple. Then it became a massive data exercise, studying known uranium deposits around the world, trying to figure out what the capital costs roughly to put them in production would be, trying to figure out roughly what the operating costs would be, trying to figure out roughly, because you'd never get it exactly, what the incentive price to bring on enough uranium production that the lights would stay on around the world was. I sort of decided, with a lot of help from the International Energy Agency, that the incentive price for uranium producers in 2000 was $30 a pound, and the stuff was selling for 10. So the exercise for me became to find deposits that were not economic at $10, but would be economic at $20, since I thought the price was going to go to 30, and buy the hell out of them. There were, at that point in time, 5 uranium juniors worldwide, 5, that had survived a 20-year bear market. I bought them all. I financed them all. I shouted at every manager who would listen to figure out what their expertise was in terms of deposit acquisition, get it on. I said, I will assemble retail capital for you. I'll do my best at assembling wholesale capital for you. Just go. By the end of that bull market, there were 500 uranium juniors. Now, most of them were total frauds. Mostly they were people who had failed at gold. They were people who had failed at copper. They'd failed at a lot of things, and they retitled their companies uranium. And after that, after uranium fell apart, they retitled their companies marijuana, that kind of thing. But it gives you a sense of the dimension of the bull market. The price of uranium had gone from $10 a pound to $140 a pound, leaving my $30 to $32 a pound incentive price, obviously, in the ashes. Just as the cure for low prices is always low prices, the cure for high prices is always high prices. With the uranium price at $140 a pound and everybody trying to get in the uranium business, it was pretty clear to me that a couple guys were going to find some. If you, in extractive industries, are enjoying 50% plus operating margins, what happens is that commodity consumers become more efficient. They substitute other substances. So demand begins to fall at the same time that supply begins to rise. And so it was pretty clear to me at the top of the uranium bull market that things were way, way, way overdone. And I had the good sense, substantially before Fukushima, in fact, well before the blow off top, to be honest, to be off most of my uranium positions, because when the price of something doesn't have to go up, it usually goes down. And of course, that's precisely what happened in uranium until we rewrote the entire scenario, which is where we are today.
Yeah. So exactly, that's my next question, actually. So why are you bullish on uranium today?
Well, I was more bullish on uranium 3 years ago. 3 years ago, the price of uranium was below 20. And the incentive price, from my point of view, was between 60 and 65. The incentive price has gone up because we have inflation all through the supply chain. And because, in particular, the social rents around the world on mining are higher. Regulation, taxes, fees. So I think the incentive price for new uranium projects is $70 to $75 a pound. And it's rising rapidly. Right now, as we speak, the uranium price in US dollars is about $51 or $52 a pound. So we have that same conundrum, the same arithmetic. Either the price goes up or the lights go out. Those are the two choices. And what's changed in the uranium business has changed for the better from a speculator's point of view. For geopolitical reasons, as an example, more countries are believing that they need energy security. Uranium provides energy security because a little tiny bit of uranium can power a lot of houses for a long time. You can store more uranium than you can natural gas or coal, and certainly more than you can wind, which doesn't store at all, or rain. The other thing is that there's increasing consensus, even among the more responsible of the environmental or green community, that poor people deserve to have electricity just like rich people do, and that it would be preferable if that electricity didn't generate carbon and also didn't generate particulate or waterborne pollution. So for the first time in my life, in certain circles, uranium is a politically correct fuel. It never occurred to me that I would be ostensibly on the green side. But I read now statements from, as an example, the Chinese government, that 500,000 Chinese citizens a year die from airborne particulate pollution as a consequence of power generation. And the Germans themselves have said, the Chinese have said, uranium is an important transition fuel for us in terms of baseload power. The Japanese, which have an understandable reluctance for nuclear power plants post-Fukushima, Japanese citizenry believing, I think correctly, that they were lied to by their government, have come to the conclusion, I think broadly across Japan, that for whatever risks they run in the uranium space, that the only chance they have for energy security and for a relatively green baseload power to run Japan is nuclear power plants. And that's really important. When you look at uranium, everybody's talking about the plants that will be built over the next 15 years. That takes a long time. The Japanese have to flip switches. If the Japanese restart the rest of their down nuclear power fleet, that's 10 million pounds, 4.5 million kilos a year, right away. You do a net present value calculation where the year begins 2022, and it has a much higher net present value than you do when you do a net present value calculation that starts 2035, pardon me. So for all those reasons, I'm a uranium bull. It's just the arithmetic is overwhelming and compelling.
I agree. Couldn't agree more. So, in Germany, the most people are still very, very skeptical about nuclear power and energy. And we see that with switching off all our nuclear plants in the next couple of years. So what would you say to them?
I would ask my German friends to look at their power bill over the last 2 years.
It's easy.
And ask them whether they think the big thinkers in Germany made the right decision. Ask them too, particularly the younger, more environmentally aware ones, how they feel about the rapid increase in coal consumption in Germany.
Yeah.
From an American point of view, the fact that we can sell that dirty lignite coal, high sulfur, high ash to Germany, which we wouldn't burn ourselves, is a wonderful thing. The trade-off in Germany would seem to be Russian gas, which is a real alternative, or for the next 10 or 15 years, lignite. Germans need to ask themselves, too, about the efficacy of solar power in a place where the sun doesn't shine so much. I've always wondered about the arithmetic of solar in Germany. In places like the southwestern U.S., where you put a solar array on top of a Costco, a big box warehouse, and you generate lots of solar power during the day in the summer when demand for air conditioning is very high, solar makes a lot of arithmetic sense. But solar in far northern climes, particularly where you're trying to use it as baseload power rather than intermittent power, this is wonderful narrative and is horrific physics.
Yeah,
and I
agree.
I think your power bills are evidence of that.
Yeah.
I think too. I believe that fossil fuel energy, including Russian fossil fuel energy, are going to be an important part of the German power matrix for a very long point in time. I believe that all of Europe made a strategic mistake relying exclusively on the Russians, that there should have been incorporated into the German and European energy mix years ago, more Middle Eastern gas, more African gas. I think there was an admirable sense that there was the chance for a political detente in Northern Europe, where German consumption of Russian natural gas would strengthen the Russian economy and lessen the probability of conflict. It turns out, for various reasons, that was probably not a good assessment. But we are where we are. And I suspect that the strongest economy in Europe, which is clearly the German economy, when Germany begins to look after its own interest and understanding that prosperity for Germany and the ability of the Germans to lead in Europe requires sustainable energy security over narrative. I think then that the role of nuclear will be important. And I think sanity will return to German energy markets.
Let's hope. The Wall Street said Germany has the dumbest energy politics in the world, and I couldn't agree more. If I look at my bill, we pay the highest prices in the world. And yeah, we will see. But let's have a look at the uranium stocks. Uranium stocks seem cheap, but at much higher valuation than 20 years ago. So especially uranium juniors got a bigger market cap today than 20 years ago. What are your thoughts on this? Has the easy money from the central banks been made, or what's going on there? Is they are too expensive right now, or what's your thought on this?
Well, first of all, I agree with your headline statement. The junior uranium stocks are not cheap. They're particularly not cheap at $50 US uranium. They're expensive at $50 US uranium. The big uranium stocks, particularly Kazatomprom, which carries with it some perception of political risk, is cheap at current prices. From an arithmetic point of view, you probably buy Kazatomprom, and Kazatomprom. And if you can afford the psychological risk of investing in a country that you can't spell, you rest there. The difference in my mind between this market and the market that existed in the early 2000s is the difference that you put up. Remember in my Paladin story that Paladin had a beginning market capitalization of 1.6 million Australian. You could buy it for parking meter money. None of the juniors starts that cheap. So the idea that you're going to get a 10,000 to 1 return now is wishful thinking. It's not going to occur. Two, you need to invest in yourself before you invest in the sector. You need to have the ability to differentiate among the juniors, the lame, the halt, the blind, and the good ones. I believe that there are 11 or 12 stocks that are buyable in this market if you assume $70 yellow cake. There are, on a global basis, 75 companies that purport to be in the uranium business. So 12 of 75 are, from my point of view, reasonably good speculations. 2 months ago, I was beginning again to sell some uranium stocks.
Okay.
The uranium juniors, simply because I'd established large positions 3 years ago. I had taken some profits a year ago, and I'm not a trader, by the way. I just let arithmetic tell me what to do with my portfolio. I'm a valuation guy. When the juniors seemed to be uniformly overpriced, particularly when the stock charts were going hyperbolic, if you have a big position, you sell kind of when you can, when there's lots of up volume. And if you're looking to increase a position or a big position, you do it on spiky down volumes. So we have a circumstance now where the air is being let out of the uranium price. All of the hot money is beginning to run like hell from the uranium juniors, including the institutional money, by the way, who wants to window dress for the quarter and not be long a stock that's fallen. So I'm very interested with what I see in the uranium space, but I need to say that I've invested time before I've invested treasure. I've studied the sector, I've studied the companies. By and large, I know the managers. I don't have to get to know them. And I think it's important that your listeners understand the necessity of investing time before they invest treasure, understanding the thesis so they don't get shaken out of it in volatility. It's interesting, Mark. Volatility. Speculators don't seem to mind up volatility. When a stock goes up 25%, they say that that's a sort of a normal and natural event, because they like the stock. When a stock goes down 25%, all of a sudden there's market manipulation, or there's all kinds of things. If you have the courage of your convictions, a 25% down market is just a sale. It's as though you went into a department store and a coat that you wanted to buy was suddenly marked down from 400 euros to 300 euros. Tell me what's wrong with that.
Exactly. You're right. So what's your favorite uranium stock actually right now?
Kazatomprom.
Okay.
Kazatomprom.
Okay.
Easily.
Are you on the buying side right now, or you just watch and wait?
I don't like to talk my own book too much.
Okay, sure.
I think you have an awful lot of subscribers, and the idea that I would suddenly have 200,000 German people competing with me on the bid is not an attractive proposition for me. I understand from your point of view that it's useful. From my point of view, it's somewhat less useful.
True story. We talk later if I stop the recording. Okay. Besides uranium, do you have a strong opinion of any other energy commodities like oil, gas, coal?
Oil and gas companies are cheap.
Okay.
I don't think that the oil price holds here, but I do think that, at least in the U.S., the market capitalizations of oil and gas companies on a net present value basis are forecasting $60 or $70 oil. More importantly, I think they're forecasting $4 gas. Natural gas. We have $7 natural gas. And particularly in the United States, our ability now to sell natural gas to you, replacing Russian gas, means that it's unlikely in the near term that gas is going back to $4. So although I think the easy money has been made in oil and gas, the easy money was over the last 2 years when people thought, as a consequence of the big thinkers like Greta Thunberg, that we weren't going to be burning any more oil. The easy money has been made. But I think the sector is still very, very, very safe to invest in.
Okay. So what do you make of Warren Buffett's bet on big on oil companies? He bought, I think, Marathon Oil.
Yeah. Buffett is just very good at arithmetic. He doesn't care about about narrative. He doesn't have any subscribers. He's just really good at arithmetic. So he looked at Marathon, and he looked at the refining margins. He looked at the fact that in the United States, there's been no new refinery construction since 1973. Gasoline demand has almost tripled, and there's no new supply. So the refining margins enjoyed by the Phillips and the Marathons of the world are at absolute record levels. Try and permit a new oil refinery in the United States. It ain't going to happen. It's just not going to happen. And so from Mr. Buffett's point of view, those refining margins likely stay intact for 6 or 7 years until you debottleneck existing facilities. Similarly, his bet on Oxy has everything to do with operating margins. It has everything to do with the net present value of free cash flow relative to the enterprise value. And in Oxy's particular case, the incredible inventory of proven drilling locations they have. It isn't just current cash flows. It's the ability to maintain production with fairly low capital expenditures, while at the same time deleveraging and returning large amounts of cash to shareholders. Mr. Buffett is singularly uninterested in narrative and singularly fascinated by arithmetic and physics. And that's why the conventional energy sector, particularly in his case, the domestic U.S. energy sector, is attractive to him. I'm attracted too, as a speculator, to international energy, international oil and gas exploration, particularly exploration in Africa. The sector has now put in 30 years coming to understand African geology. And the discoveries in places like Namibia, Mauritania, Mozambique, Kenya are spectacular. And investors are paying no attention to it because they're afraid of Africa. No attention to it because the oil majors are so cheap that they don't feel like they have to speculate. This feels to me like the best time to be an international exploration speculator since the 1990s, the last time nobody cared. And I'm very, very, very attracted to that sector. For speculators who have money that they can afford to lose some of, the downside in exploration is 100%.
Yeah, definitely. Always. You can win millions, but you can lose only 100. Yep. Yeah, but despite all that green transmission, we see everybody goes green. The ECB, the European Union, the governments all over the world. ESG is a big, big topic. Don't you think like coal mines, gas and uranium will, uranium not okay, but coal and gas and oil will get hit?
I do. I think they're hit right now. I think the perception of the industries is such that their share prices are lower than they should be, so the industry's cost of capital is higher. I believe, too, that it is increasingly difficult for the large banks around the world to lend to the energy industry because the governments don't want them to. The consequence of that, of course, is that I'm moving back into energy lending because I don't care what the government wants. But when you mention ESG, one of the reasons why I enjoy doing interviews like this in networks that are as vast as yours is I want to ask, in particular, young investors and young voters, whether the poorest 3 billion people on Earth should have better material standards of living. Is part of ESG maintaining a circumstance where 1.2 billion people on Earth have no access to electricity? That comes under the S part, right? Social?
Yeah.
How about 2 billion people on Earth that have access to intermittent or unaffordable electricity? Is it socially acceptable that the poorest half of humankind in emerging and frontier markets have a material standard of living that isn't a quarter of yours? Those questions need to be asked. If you ratchet the question up a little bit, in Germany, who should decide what's acceptable energy? Yeah. Should Angela Merkel decide? Or should the people who fund Germany, the taxpayers, the investors, or the voters decide? Is part of governance the fact that you consign responsibility for what you think is right to your government? Or do you have an individual responsibility to study the issues? If you want to buy green energy, should you be able to buy it? If you think that the economic surplus around green energy would be better spent on education or on something else, who should make that decision? Should it be made in Brussels? Should it be made by Merkel? Or should it, in fact, be made by the people whose money it is? Governance, I would suggest, is all about decision-making. Is the world better off if there were 80 million Germans making the decision? Or is the world better off with 100 Germans making the decision? From my point of view, the world is better with distributed decision-making. I've seen the impact of concentrated decision-making in my country, One impact of that was the Vietnam War. The idea that 500 people decided for 250 million people what our foreign policy should be was disastrous. And as an old man, I prefer the safety of distributed decision-making over perhaps the efficiency of centralized decision-making. I think that your energy bills are an accurate reflection of a very large mistake made by a very few people.
Yeah, true. 100% true. Yeah, I couldn't agree more. I believe in decentralized systems anyhow. Perhaps we come back to this later, but let's switch to base metals. Around here in Germany, Switzerland, Austria, we don't really have any experience with commodities. So most people know very little about the industry and the whole market and mining in general. So that's being said, a lot of people around here are very keen on electric cars, though, different energy sources and so on. In order to succeed, we will need a lot of commodities, especially copper, nickel, and so on. So what are your thoughts on the Green Revolution, and how do we get enough copper to produce all the claimed environmentally friendly products?
Mark, even without electric cars, the electrification of the world is going to require way, way, way more base metals than we're using. Yeah. Absent a global recession or depression, we are going to have extraordinary shortages of copper and nickel in particular, and cobalt in the next 5 years, absent a global recession or depression. The truth is that as a society, not just in Western Europe, but globally, we have been underinvesting in copper exploration, in new mine construction, in permitting, for 3 decades. And you don't find copper and build a copper mine overnight. It takes decades. No. We're at least 25 years behind the curve. Most of the world's large copper mines right now, Mark, they're my age, okay? I mean, they are past their prime. Bingham Canyon, the biggest mine in the United States, 130 years old. Escondida, 50 years old. Chuquicamata, 110 years old. Grasberg, 60 years old. Despite what Greta thinks, you don't stand on the sidewall of an open pit mine and throw in water and fertilizer and have it grow more copper. That's not the way it works. Every day that you mine, your business gets smaller. And we are 20 years, 25 years behind in the process of capital investment. The consequence of that is that we are going to see material shortages without electric cars. Electric cars will be, if you will, the icing on the cake. Without focused new investments, without a rethinking in developed countries about permitting regulations, about financing, we're going to have material shortages in base metals, and we're going to have them within 5 years. Now, all bets are off if we have a global synchronized recession or depression. You can cut supply some if you cut demand. So the caveat in your investors' minds needs to be the thing that derails this would be higher real interest rates, and the consequence of that, a global recession or depression. And that's something that everybody needs to think about in the back of their minds. Absent that, it is absolutely inevitable that base metals prices go higher as a consequence of material shortages.
But like you mentioned, we think we see a recession on the horizon. Everything speaks for it, actually. And in a recession, cash is king. Yeah, like in a deflation, then copper, gold, everything went down. So despite we have a high demand for copper and a short supply, it would speak for it that we see lower copper prices, don't we?
If we have a synchronized global recession, the answer to that is yes.
Okay.
My own belief is that we need to let the air out of the system a little bit. I'm a huge optimist about the future of humankind. I'm greatly encouraged by the fact that whatever stupid things we do collectively when we vote, as individuals, we can increase the well-being of humankind. I'm delighted that a collection of pimply-faced kids can take over a garage in Sunnyvale, California, and out pops Google or Microsoft, And I'm delighted, too, with the increase in technology and the democratization of technology through communications, that garage next time might be in Lagos, or it might be in Jakarta, or it might be in Sao Paulo. I like all that. I think that if we suffer a recession or depression, what will pull us through won't be government action, but rather individual initiative, particularly among the poorest of the poor. I'm a huge bull looking out 15 or 20 years, assuming that we don't utilize our nuclear as opposed to our atomic capabilities, or that we don't monetize our stupidity by assigning too much responsibility for our future to the governments.
Yeah, I couldn't agree more. I think it will get harder, but then it will get much better. And crisis or crashs are very important for the evolution of mankind. That's when we learn. That's when we get innovative, and when we develop new things. That's very good, actually. So if you look in your own biography, you had the most learning progress when you had perhaps the hard times, when you made a wrong investment, for example. Yeah, you learn from your mistakes. That's it. Actually,
well, I've made lots of them, so
yeah, that's why you
makes sense. I would have learned a lot.
Wise, and why you're legend. You learned out of your mistakes. So let's finish off here with precious metals. Because, for example, if I would tell you hey, we have inflation of 8.5% in the US, 7.5% in Europe. We have a war in Europe. We have printing central banks. You would say gold must be at $5,000, but this isn't the case. So what's going on with gold? Why isn't gold the inflation hedge it should be, and why isn't it at a new record high?
Remember the beginning part of this interview where I said there's a substantial difference between the word inevitable and imminent. The fact that something has to happen doesn't mean it has to happen quickly. Let's look at the reasons why I think the gold price has to go up. The first one is that the world has changed. The last 40 years have been the most beneficent economic times in human history. The interest rate has fallen. Globalization has meant that there has been much more peace than war. We got a demographic boom, particularly from the baby boomers coming into their productive years of earnings and savings. There's been massive increases in innovation and technology, and the world has become more inclusive. Half of humankind, half the IQ of humankind, which is to say women, have been invited into the workplace, and it's made a huge difference. In addition to that, contributions from people who don't look like you and I, contributions from Chinese people, from African people, from Latin people, in the last 40 years have contributed to the rise of humankind. A lot of that continues, but a lot of it doesn't. The period of reduced interest rates, declining real interest rates, is over. The interest rate on the U.S. 10-year Treasury has declined from 15.6 to 3. How do you take a negative real interest rate lower? You don't do it. It would appear that the peace dividend in the near term is problematic. Europe would suggest that trade is becoming problematic, and economies are becoming more nationalistic. Increased trade is good. Decreased trade is bad. So that's a problem. But let's look more specifically at precious metals. Precious metals do well when savers and investors are concerned about the maintenance of their purchasing power. Yes, war matters, but war doesn't matter so much as the deterioration of purchasing power in other savings and investment instruments. So let's decide whether those fears are warranted. The first thing that comes to my mind, pardon me, is quantitative easing. It's happened in Europe, it's happened in the United States, and if you were to characterize it correctly, you wouldn't call it quantitative easing, you'd call it counterfeiting. The creation of specious currency units by a government or by an individual. 35% of all the US dollars in circulation, as an example, have come into existence in the last 30 months. Yeah, is that in response to an economy that's grown by 35%? Was there a need for liquidity to function trade? Of course not. It's pure counterfeiting. And the production of new specious units, by definition, devalues the existing currency units. The second is more pernicious. Debt and deficits. I don't know the European equivalent statistics, but in the United States, the on-balance sheet liabilities of the federal government, not including state and local governments, just the Fed, exceeds $30 trillion. That's 30 with 12 zeros.
Crazy.
It's nuts.
Yeah.
But the off-balance sheet liabilities are worse. What are off-balance sheet liabilities? I would encourage your listeners to look at me, 69 years old. Entitlements, the net present value of promises that our society has made to each other. Pensions, Medicare, all that kind of stuff. In my country, that number, the net present value, is $120 trillion. So add $120 trillion to $30 trillion, you get a number that's $150 trillion in obligation before state and local debts. And we service this with a budget that is projected to be in deficit in excess of $2 trillion. In other words, rather than amortizing this debt, we add to it at the rate of $2 trillion a year. But it gets worse. Negative real interest rates. The idea that you forego consumption now so that I can consume. I pay you back 5 years from now, and I pay you back less than you gave me. This is an artificial construct. This is not something that one would do willingly. Let's look at the arithmetic around the U.S. 10-year Treasury, the U.S. dollar being still the reserve currency. The U.S. government solemnly promises to pay you 3% interest, and they will because they can print. Yeah. In a currency where the purchasing power is declining by 8.5% a year. In other words, the U.S. government solemnly promises to reduce your purchasing power by 5.5% a year, compounded for 10 years. The first promise in my life by my government to me that they will keep. And it's a horrific promise. If anything should make you concerned about the efficacy of your purchasing power in sovereign instruments, it's the government's solemn promise to destroy your wealth over time. Yeah. A promise that they're going to keep. So for those reasons, I think that gold will do well. There's two other things that you need to consider. The first is that precious metals market share relative to others in savings and investment instruments is at 40-year lows. In the United States, the consolidated market share of precious metals and precious metals-related securities is 0.5% of the total value of all savings and investment assets in the United States, down from a 4-decade median and mean of 1.5% to 2%. So if precious metals merely reverted to mean, demand would triple or quadruple. Finally, the biggest institutional investors in the world have for 40 years maintained an asset allocation that was roughly 60% equities, 40% debt. That worked well during a period of lower interest rates. But if you were, let's say you were running Norges Bank, the largest institutional investor in the world, the Norwegian Sovereign Wealth Fund, you were responsible for the well-being of Norwegian citizens after the oil ran out. And 40% of your portfolio in debt was yielding you 3.5%, while the purchasing power was declining by 8.5%, you would come to the not-so-stunning conclusion that you had no arithmetic chance of maintaining the purchasing power of your citizens over time. You would need to disintermediate, which is a fancy way of saying selling some of your debt portfolio and redeploying those assets in an asset class that had a chance of maintaining your purchasing power, which is precisely what precious metals have done for 1,000 years. So having that deep but simple understanding of precious metals gives me absolute confidence to suffer through volatility, time preference, all those things. I absolutely believe that a precious metals bull market is inevitable and increasingly becoming imminent.
So what is your target for gold and silver in this next bull market?
I don't have one. Understand that you measure it against a floating abstraction, which is to say the euro or the US dollar. I've come to the point in time in my declining years, to be honest with you, that I'm starting to measure my expenditures and my investments in gold terms rather than measuring my gold in US dollar terms. I've come to the conclusion at age 69 that the US dollar is useful for liquidity, but as a valuation metric, it's a floating abstraction. And that a gram of gold is probably a better durable constant than the US dollar.
Yeah. So if you invest in precious metals, do you prefer like mining stocks, like juniors, mid-tiers, or you buy the physical stuff, or both?
Yeah, the answer to that is all of the above. The truth is, being the largest shareholder of Sprott, I benefit indirectly when gold does well. I probably wouldn't have to own gold, but I found that owning gold, having liquidity generally, gives me a sense of well-being and allows me to sleep well at night. And I like to sleep. I invest in the senior mining stocks because I'm good at arithmetic and I understand them. And I speculate in the juniors because I work very hard and I have a durable competitive advantage over other participants whose investment methodology has got a hunch, bet a bunch. I've enjoyed many 10-baggers in my career. And despite the fact that I don't need them, I guess, anymore, I like them.
Yeah, it's like a hobby. Yeah. So you have a favorite gold and silver mining stock?
There is no one size...
I just try.
No, I understand. There's no one size fits all answer, though. I mean, I would give you some names in the gold business, but the truth is that the needs and the risk tolerances of investors vary. For your older constituency, I like Barrick. I like a sustainable, 3.7% dividend. I've known Mark Bristow, the CEO, personally for 35 years. I have a high regard for his common sense and his integrity. I like the asset mix. I like the incredible free cash yields. And I like the fact that he doesn't distract himself with small mines. He wants great big mines. That might be boring for some people. Coming down the quality trail, most people now hate a Canadian name called B2 Gold, whose only attribute is it pumps out a ton of cash. I like cash. So I'm attracted to that. But, I'm attracted to 50 or 60 names, to be honest with you. One thing I can tell your listeners, if you'll allow me,
please.
Any of them who care about my opinion of their precious metals mining stock portfolio can access it. Any of them that go to my website, ruleinvestmentmedia.com, you enter your natural resource portfolio on that website on a no obligation basis. I personally will rank every company I know, 1 to 10, 1 being best, 10 being worst. If I think my comments on your company might have value, I'll comment on individual issues. Understand that there are thousands of them. I can't comment on all of them. Yeah. And I'll send that back on an absolutely no obligations basis. So
perfect. I put a link to your website in the show notes, and it's a very nice offer. I think you will get some emails from Germany soon.
I look forward to it. I've enjoyed my discussion with German investors. In particular, their comments on my comments on German politics have always amused me. So I look forward to visiting with as many of your listeners as care to take me up on my offer.
Thank you very much, Rick. So for the end, I would like to ask you some rapid fire questions. If you could invest in one commodity for the next 10 years, which would it be?
Gold.
Okay, that's
Gold.
Clear. Will Bitcoin survive this decade?
Yes. Maybe not Bitcoin, but the distributed ledger and blockchain technology. Cryptocurrencies as a technology, cryptocurrencies as a way to avoid the depredation of government will definitely survive.
Do you own any cryptocurrencies?
I do not. I'm waiting until they have a gold-denominated token or coin.
Okay, this will come. I know that. So will the US dollar survive this decade?
Yes. Yeah. Bruised, beaten, but will it survive? Yeah, absolutely. I joke that the US dollar is the worst currency in the world except all the others.
Okay, marvelous. What was your favorite book you read about investing?
Easily, securities analysis. 4 books, though. People need to look at, young people. Economics in One Lesson by Hazlitt, which tells you the way the world works as opposed to the way the big thinkers think it should work. The Intelligent Investor by Ben Graham, which is the best investment book ever written relative to the effort required to read it. Then Securities Analysis, simply the best investment book ever written. And then Human Action by Ludwig von Mises, talking about the interplay between individual volition and group performance.
Yeah, beautiful books, definitely. So last question, it has nothing to do with commodities or money. What is the meaning of life for Rick Rule?
Improving as a human being, being kind, genuinely kind, accepting the gifts that are on offer from the world to me and returning them in as full a measure as is possible.
Perfect. Yeah, Rick, you are very kind and very charming because at the beginning of our interview, before we started recording, you said I look too young to write 6 books, and you guessed my age of 37. So I sent you some kisses and money. No, thank you very much. It was a pleasure. It was an honor having you on my show, and I would like to repeat this again. And of course, I would like to meet you in person in Switzerland or in Germany.
I will be at the Swiss Mining Institute conference in Zurich on the 1st and 2nd of June. Any of your listeners who care to attend can attempt to get free admission to the conference. The conference is normally free, although they're sometimes picky about who they allow. But I would love to have a coffee or have a beer, depending on the time of day, with anybody for whom that would be amusing.
Perfect. So thank you very much. And I say goodbye to you, my audience. This was the legendary Rick Rule, and I hope to invite him again. Thank you, Rick. Take care.
I hope you do. I look forward to a second appearance. Thank you.
Na, habe ich euch zu viel versprochen? Wie hat euch das Video gefallen? Ab in die Kommentare mit eurem Feedback. Und natürlich, wenn ihr noch kein Abo habt, gerne die Abo-Glocke abonnieren, aktivieren, abonnieren und natürlich den Kanal gerne weiterempfehlen, damit möglichst viele Menschen finanzielle Intelligenz erreichen. Wenn euch weitere Videos interessieren zum Rohstoffsuperzyklus, könnt ihr gerne bei mir in der Playlist schauen. Die findet ihr natürlich bei mir auf dem Kanal. Jetzt die Zusammenfassung zu Rick Rules Aussagen und meiner Bewertung. Also Rick geht davon aus, dass wir vor einem langjährigen Rohstoffsuperzyklus stehen. Das sehe ich genauso. Er geht auch davon aus, dass nicht nur die Edelmetalle, sondern auch die Industriemetalle noch das Beste vor sich haben. Also Industriemetalle wie Aluminium, Kupfer, Nickel, Kobalt und so weiter. Auch da stimme ich mit ihm absolut überein, weil ihr dürft nicht vergessen, die Grundlage für die Digitalisierung, für die E-Mobilität, für die erneuerbaren Energien sind vor allem Silber, Kobalt, Nickel, Kupfer, all die seltenen Rohstoffe, die es begrenzt nur auf der Erde gibt, und da kann man in den nächsten Jahren auf jeden Fall daran partizipieren, wenn man jetzt schon frühzeitig einsteigt in ETFs, in Fonds oder in Aktien. Einen empfehlenswerten Fonds werde ich natürlich unten gerne auch verlinken. Interessant fand ich auch die Aussage, mit der ich auch übereinstimme, dass das klassische 60-40-Portfolio, also 60% Aktien, 40% Staatsanleihen, definitiv vorbei ist und dass der Goldanteil bei den Investoren noch sehr, sehr gering ist und da großer Nachholbedarf besteht. Sehe ich ebenfalls so. Gold wird meiner Ansicht nach genauso wie Silber in den nächsten Jahren viele positiv überraschen. Und natürlich hat man mit Minenaktien im Edelmetallbereich dann auch eine Art Hebel auf den Gold- und Silberpreis. Durch die E-Mobilität sieht er einen großen Bedarf, vor allem bei den Metallen wie Kupfer und Nickel. Und da sieht er auch Engpässe, weil Kobalt, Kupfer, Nickel sind eben nur mal massivst begrenzt, sind nicht vorhanden in der Menge, die wir benötigen sollten, um diese Transformation wirklich umzusetzen. Zudem dauert es Jahrzehnte, bis neue Minen entdeckt werden und dann auch fördern. Aber die Entwicklung der Elektroautos, der E-Mobilität ist nur die Spitze des Eisbergs. Ich habe es vorhin schon erwähnt, Digitalisierung, Blockchain, künstliche Intelligenz, erneuerbare Energien, Windräder etc. All das braucht enorm viele Rohstoffe, die eben nicht vorhanden sind in den Mengen, wie wir sie benötigen. Und aus dem Grund, unterstreicht er nochmal, ist der Rohstoffsuperzyklus erst ganz am Anfang. Vor allem, weil es ja auch politisch gewollt ist, also ESG und Co. Und seine These ist, dass die Menschen aktuell viel reicher sind als in den 70er Jahren im Schnitt. Und summa summarum wird dann natürlich auch der Rohstoffverbrauch weiter steigen. Aber jetzt auch wieder die Kehrseite, der Superzyklus verläuft nicht sozusagen exponentiell nach oben in der Einbahnstraße, sondern nein, es sind Wellenbewegungen, es sind ja auch Turbulenzen zu erwarten, Gegenbewegungen, Korrekturen, und man muss einen langfristigen Atem haben. Also man muss also wirklich Jahre denken und nicht irgendwie in Monate. Und dahingehend sollte man Marathon laufen statt Kurzstrecke. Und die Gefahr einer Gegenbewegung, einer Korrektur ist gegeben und die kann im Rohstoffbereich relativ heftig ausfallen. 30, 40, 50% sind keine Seltenheit, aber trotzdem kann dann der Bullenmarkt noch intakt sein. Deswegen Augen zu und durch, langfristig investieren, vielleicht sogar über einen Sparplan auf einen Fonds oder auf einen ETF. Lustig fand ich auch seine These, die ich übrigens gut nachvollziehen kann, weil ich auch so handle, nämlich antizyklisch in Sachen zu investieren, die von der breiten Masse gehasst werden, ne? Wie zum Beispiel aktuell fossile Energieträger, also Öl, Kohle, Gas, wird ja von allen gehasst, trotzdem kann man da jetzt investieren, genauso Uran natürlich, ne? War einer der meistgehasstesten Trades oder Investmenttipps der letzten Jahre, auch in meinem Buch habe ich 2021 Uran stark empfohlen, ich habe die Renaissance der Uranwerte der Atomkraft prognostiziert und es ist wirklich eingetreten, die Werte, die Empfehlungen aus dem Buch Buch sind explodiert, haben sich verdoppelt, teilweise sogar verdreifacht. Wenn du das Buch noch nicht hast und weitere Investmenttipps willst, kannst du es gerne bestellen bei mir im Webshop, gerne mit Signatur, Widmung und einem Herzchen. Ja, und apropos Uran, da ist ja ein Ultra-Bulle und bezüglich seines Erfahrungsschatzes hat er wirklich viele Insights und hat den Uran-Bullenmarkt auch immer wieder richtig getimed. Und er sagt ganz klar, Uran wird ein großes Comeback erleben. Auch da sind wir wirklich Brüder im Geiste, kann ich nicht anders sagen. Und wir dürfen nicht vergessen, da sind wir wirklich momentan der Geisterfahrer schlechthin weltweit. Während wir abschalten, schalten alle anderen Länder an. Egal ob Japan, die Fukushima hatten, oder Italien oder die Schweiz, die jetzt sozusagen auch den Müll Richtung deutsche Grenze bringt. Arabien, also selbst die Ölstaaten werden jetzt in die saubere Atomenergie investieren, die natürlich auch viel sicherer geworden ist. Atomenergie, Kernkraft ist die einzige grundlastfähige, saubere Energiequelle, die wir haben, weil das ist Solar und Wind eben nicht. Seiner Meinung nach sind die großen Uranproduzenten momentan günstig bewertet. Zusätzlich stimmt er mir überein, dass die fossilen Energieträger, die ich favorisiere, die ich gut befinde, in die ich auch investieren würde, nach wie vor noch lange eine Rolle spielen werden bei der Energieversorgung der Menschheit. Alles andere wäre wirklich, wie gesagt, naiv. Auch bei Öl und Gas sieht er einige interessante Investments. Da sieht er zum Beispiel großes Potenzial, auch vor allem bei afrikanischen Explorern. Also wir sehen, er ist ein absoluter Realist und seine 40 Jahre Markterfahrung hat er, denke ich mal, ganz anschaulich rübergebracht. Mich würde es interessieren, ob du da was rausziehen kannst, ob du schon in irgendwas investiert bist, was er empfohlen hat oder was ich empfohlen habe, wie das gelaufen ist oder wie es laufen wird. Ne? Und denk daran, immer tranchenweise einsteigen, nur einen Teil investieren, nicht alles auf eine Karte setzen, diversifizieren, aber ich bin davon felsenfest überzeugt, dass der Rohstoffsuperzyklus ganz am Anfang ist und momentan ein guter Zeitpunkt ist, um die ersten Tranchen zu setzen, weil wenn der Markt runtergeht, wenn ein Crash kommt, wenn die Korrekturen stattfinden, dann sollte man anfangen zu kaufen, vor allem wenn die Panik groß ist. Also, ich freue mich über euer Feedback, bleibt gesund, bleibt tapfer und denkt immer daran, wegen solchen weisen Leuten wie Rick Rule ist die Welt da draußen besser, als wir glauben. Herzlichst, euer Marc.